Welcome to Lunch Break. I'm Lee Hawkins in for Tanya Rivero. The U.S. economy grew at 3.7% seasonally adjusted annual rate in the second quarter of 2015. That's a much brisker pace than first estimated. What does this mean for the economy, and how will it impact the Federal Reserve's upcoming decision on whether or not to raise interest rates? Joining us now to discuss this is WSJ's Eric Morath. Eric, always great to see you.
Good to see you.
Okay, so what was behind the expansion?
Well, there was a lot of revisions in this morning's report. One of them was that business investment picked up at a much faster pace than previously thought. Businesses were spending on construction, software, those types of items. But there was also a big buildup in inventories, and that's not always seen as a great sign for the economy. That means that we had some economic expansion because stores and warehouses were well stocked. That might mean next quarter we have a little bit of a slowdown as we let that inventory dissipate.
Okay, so growth averaged only 2.2% during the first half of the year, which was in line with expectations. Do economists expect healthy growth to carry into the third quarter?
Well, there's a lot of questions about how this next quarter will play out. For one, we've seen the turbulations in the financial markets and the slowing economy in China, and that's expected to be a headwind to U.S. growth. And there's some questions about what something like government spending, which was way up in the second quarter. If that's something that's really going to continue throughout the year, a lot of state and local governments are still struggling with tight budgets. So probably somewhere around that 2% range is more likely than a breakout 3.5%.
Okay, GDP data, of course, offers a backward view of the economy, detailing a 3-month stretch that ended in June. Could the latest market volatility and the devaluation of the yuan cast greater uncertainty to the future of the U.S. economy?
Well, yeah, I think that's certainly the case. When it comes to the Fed's decision in the next few weeks, I think they'll be looking more at those factors. I think this report might give them some confidence that at least through the first half of the year there hasn't been an economic slowdown. But I think the more recent news will play a greater role in both how the economy will grow in the second half of the year and what the Fed will do.
Okay, in terms of whether or not to hike interest rates in mid-September?
Yeah, I don't think that this report's really going to change the Federal Reserve's view. I'd actually be looking very closely at tomorrow's report on inflation. It'll be one of the last inflation readings that they'll see. They're really hoping to see some firming on that. And then, of course, the jobs report on September 4th really could be a make-or-break data point for the Fed.
Eric Morath, always with the great analysis. Thanks a lot, buddy.
All right. Thank you.